ION Geophysical. Our analyst team consisted of Bertrand Donnes, Yuan Fang, Aubrey Lan, Christopher Savell, and Xingge Zhu. Our investment research manager was Shiv Thukral. We would like to start off by showing you how ION has performed relatively compared to the Oilfield Service Index as well as the S&P 500. As you can see by the graph, ION is much more sensitive to market shifts than the oil and gas industry, but still moves in the same general direction. This is most likely due to ION's heavy reliance on E&P capital expenditures. As you can see from a 6-month stock price chart for ION, it currently trades at roughly 50% off of its July high of $11.04. Many factors played a part in this downward trend, including oil and gas production restrictions and recent economic turmoil. ION provides seismic data acquisition services and products to exploration and production companies. ION's headquarters are located in Houston, but it operates on a global scale in 13 countries throughout North America, Asia, Africa, and Europe. ION recently entered into a joint venture with China National Petroleum and formed the Land Seismic Services company BGP. ION focuses on its multi-client data library, which contains all of the seismic data that it has collected for E&P companies. Once added to the library, the data can be sold to multiple companies to generate recurring revenue. ION is currently aiming to maintain an asset-light strategy by reducing fixed costs and inventory and using third-party contractors to complete capital-intensive projects. ION is avidly expanding its solutions segment in the global market and should see increased business from these endeavors. In regards to the joint venture BGP, ION is developing its seismic equipment to meet the needs of foreign E&P companies in an effort to reach a new market. In November of 2011, at the time of this report, ION's market cap was just over $800 million, with a 52-week price range of $4.20 to $13.92. The stock had a beta of 2.28 and was not currently yielding a dividend. It is important to notice that the current stock price of $5.23 is just barely above twice the book value per share, which is an extremely low multiple compared to ION's historical pricing. When comparing ION to its peers, we noticed ION performs much better than the peer average in a number of categories. As far as performance measures go, ION's ROA beats its peer average with a ROA of 7.7%. Only GeoKinetics outperforms ION in this category. ION's ROE is the highest in its peer group at 9.73%. This is much higher than Petroleum Geoservices, who has the second highest ROE of 1.15%. For the debt-to-equity ratio, a percentage above 100% indicates that a company relies heavier on debt than it does equity. ION's debt-to-equity percentage of 58.44% means that ION relies more on equity financing than debt financing. This percentage is lower than the peer average of 295.55%, indicating that the average company among the peers relies more on debt financing than on equity financing. All the liquidity ratios are measurements of the capability of companies to pay their current liabilities requirement. ION has a current ratio of 2.4, but the industry average is 1.7. Therefore, ION is more capable of meeting its current obligation than its peers. The quick ratio measures a company's ability to meet its current obligations. For this quarter, ION has negative cash flows from operations, therefore its ratio was lower than the peer average. The EBIT coverage ratio is a measure of a company's ability to meet its interest expense based on its earnings before interest and taxes. ION's EBIT coverage ratio of 4.32 is higher than the peer average. The EBI coverage ratio is a measure of the company's ability to meet interest payments based on its earnings before interest. ION's EBI coverage ratio of 3.4 is much higher than the peer average, which is a positive indicator for ION. ION's operations are exposed to a number of risks. The demand for ION's products and services may be affected by weather conditions. ION's revenue depends heavily on the amount of spending done by E&P companies. Consequently, inclement weather may delay E&P operations and lead to a decreased demand for ION's products and services. ION's facilities are also at risk of being adversely affected by inclement weather. For example, in 2005, Hurricane Katrina postponed operations in Louisiana. ION and many E&P companies operate in the Gulf of Mexico and are subject to hostile conditions, particularly hurricanes. The cyclicality of ION's operations is mainly dependent on the volatility of oil and gas prices. Generally, an E&P company will drill for oil if the expected future price will make the venture economical. ION's operations are affected by the volatility of oil prices because its operations are dependent on the amount of exploration done by E&P companies. The U.S. Environmental Protection Agency has proposed regulations that limit the amount of harmful emissions produced by vehicles and industrial plants. Environmental regulations that are created to protect the Earth's environment may decrease the production of hydrocarbons. Consequently, the decreased production for hydrocarbons will have an adverse effect on the demand for ION's products and services. In recent years, the government has considered enforcing regulations on greenhouse gas emissions. Congress supports a plan of generating 80% of our nation's electricity from clean energy by 2035. As the government continues to encourage clean energy and discourage unclean energy, the price of oil may fall and reduce ION's revenue. Regulations set to preserve the nation's environment are somewhat unpredictable. As a result of the BP oil spill, for example, the government made it difficult for E&P companies to obtain permits to drill offshore. In the third quarter of 2011, the government began issuing offshore drilling permits again. If more offshore drilling permits are granted, ION's revenues will increase. Because ION generates revenue from several countries, it is exposed to exchange rate risk. Therefore, earnings can fluctuate positively or negatively depending on a country's currency versus the US dollar. The company has approximately $103 million in debt in 2010 that accrued interest based on market rates. For every 100 basis point increase in the interest rate, ION's interest expense increases by approximately $1 million. ION uses interest rate caps to limit the exposure to these interest rate risks. Since 2006, ION's total long-term debt has been between $6.2 million and $254 million. ION's long-term debt has fluctuated because much of its long-term debt reached maturity over the past few years. As ION's debt matures, it issues new debt to align with its capital needs. If the company's income from operations does not exceed its capital needs, then it will need additional external financing. Currently, ION's long-term debt is $102 million. We believe this debt level is reasonable, but ION still faces some long-term risk. We determine the value for ION using the discounted cash flow, price to earnings, price to cash flow, and price to book value methods. We derived a 12-month price target of $7.99 per share. Therefore, we rate ION a market outperform. Using the DCF model, we calculated a target price of $10.87 per share. We used a calculated WACC of 15.25% and calculated a terminal value using a perpetual growth rate. We calculated an average price-to-earnings ratio of 31.49 for the oil and gas services industry. When applied to ION's earnings, this ratio produced a valuation of $9.59 per share. We calculated an average price-to-cash flow ratio of 4.81. This ratio, when applied to ION's cash flows, arrives at a value of $5.48 per share. The industry average price-to-book value ratio was 2.01. Using this information, we valued ION at $6 per share. Our projections for ION's future financial performance are based on the economic outlook and the company's future financing activities. We took into account the recent spending trends of E&P companies. Spending by E&P companies has increased since the recession. However, it is uncertain whether economic growth will continue to drive E&P spending. We also considered future demand for energy and how it would affect oil and gas prices. Demand for energy is expected to rise, especially in rapidly growing countries like Brazil, Russia, India, and China. This increase in demand for energy should drive oil and gas prices. Therefore, E&P companies should produce more oil, which will help ION generate more revenue. As for ION's financing activities, we were impressed by ION's long-term debt-to-equity ratio of 25.29%. This low level of debt gives ION a large amount of financial flexibility and also gives ION the ability to increase its efforts on innovation. We expect ION to have its debt paid off by 2014. The company's revenue is driven by the capital expenditures of upstream E&P companies. The expenditures of E&P companies are largely based on oil and gas prices. When prices are high, E&P companies are inclined to drill, therefore increasing the demand for ION's products and services. When considering all revenue drivers in our projections, we assume that renewable energy will not have a large effect on the market share of oil and gas companies in the foreseeable future. Insiders and owners with at least a 5% stake in ION account for 33% of shares outstanding, up from 23% in 2010. Since June 2010, 3 of 4 insiders and owners still listed as major direct holders have increased their ownership in ION. This increased ownership suggests that insiders and owners are confident about ION's future. The largest direct holder in ION is its joint venture partner, BGP. BGP held 23 million shares as of March 25, 2010. The second largest holder is James Lapierre, the chairman of the board, who held 1.7 million shares as of September 6, 2011. The shares of ION are held by 164 institutions. These shares held by both institutional and mutual fund owners account for 57% of the outstanding shares, an increase from 53% in 2010. The institutional and mutual fund owners account for 85% of the float, an increase from 69% in 2010. The largest institutional holder is FMR LLC with 12.3% of the outstanding shares. Together, the 10 largest institutional holders accounted for 43.26% of the outstanding shares as of June 30, 2011, an increase from 27% in 2010. The largest mutual fund holder is Wells Fargo Advantage Small Cap Value Fund, accounting for 4.24% of the outstanding shares. The largest 10 mutual fund holders account for 19.47% of the outstanding shares, up from 16.23% in 2010. Overall, the increased ownership by insiders, owners, institutional holders, and mutual fund holders indicates confidence in the future performance of ION. Our group traveled to ION's headquarters in Houston on October 14, 2011 to meet with the company's Vice President and CFO, Brian Hansen. Mr. Hansen allowed us to immediately discuss technical aspects of the company. Most notably, we discussed the asset-light strategy that ION has implemented. This asset-light strategy gives ION a competitive advantage because it is able to earn a high rate of return through its services and segment. E&P companies pay for ION to collect seismic data that ION in turn sells to other companies. This strategy gives ION the potential for an extremely high return on its investment. Mr. Hansen stated that the majority of ION's business in the next few years should come from its service segment, specifically its multi-client data library. We also discussed the possibility of further joint ventures, and learned that the joint venture with BGP was undertaken because it was a unique opportunity that allowed ION to expand into areas otherwise unreachable, such as Asia, Russia, the Middle East, and Africa. Before this joint venture, ION did not have established relationship that allowed it to do so. Mr. Hansen also mentioned that the world's largest undeveloped oil reserves are located in Antarctica, and ION intends to work with large E&P companies to produce seismic data to allow for future production. You should not rely on this report in making any investment decision. Consult an investment professional and/or conduct your own primary research regarding any potential investment. Thank you.